Ever wondered how to make your money work for you in the stock market? Welcome to the fascinating world of stock market investment. At its core, the stock market is a marketplace for buying, selling, and trading company shares. It's a place where your money gets a chance to grow, potentially turning every dollar into 2 or 3 or even more. But just like any marketplace, it has its own rules, its own language. It's not just about picking a company and tossing in your money. It's about strategy, knowledge, and understanding market trends and economic indicators. Investing in the stock market is a bit like sailing. You wouldn't set sail without understanding the sea, the weather, and how to navigate. Similarly, successful investing requires understanding the stock market's waves, its changing climates, and how to navigate through them. By understanding the stock market and its intricacies, you can turn your money into an income-generating tool. Stay tuned as we delve into the details. Tip number 1, always start with a plan. Now you might be thinking, well, that seems obvious, but you'd be surprised how many people dive headfirst into the stock market without a clear strategy. A wise investor knows the importance of having a specific goal, whether it's saving for retirement, funding your child's education, or buying that dream vacation home. These goals will guide your investment decisions. Next, consider your timeline. If your goal is decades away, you might afford to take more risks. But if you need your investment to pay off in a few years, a conservative approach may be smarter. Risk assessment is another crucial aspect of your plan. Assess your risk tolerance. Remember, higher potential returns usually come with higher risk. Lastly, brace yourself for a continuous journey of learning. And the stock market isn't static, it changes every day, every hour, every minute. You'll need to keep up, and we'll discuss more about this in our next tip. Remember, a good investor always has a plan. Tip number 2, never stop learning. The stock market is a never-ending sea of knowledge, with currents of trends and waves of financial reports. It's a realm where yesterday's wisdom could be today's folly, where the market sentiments swing faster than a pendulum. To navigate these waters, continuous learning is your compass. Staying updated with market trends is akin to charting your course. It helps you understand where the market is heading and how you can adjust your sails. Similarly, understanding financial reports is your weather forecast, allowing you to anticipate storms and prepare for them. But don't just learn from books or reports, learn from the masters of the trade. Successful investors are the lighthouses in this vast ocean, their experiences and strategies illuminating the path to successful investing. Remember, in the world of stock market investing, knowledge isn't just power, it's your lifeboat amidst the high tides of market volatility. The more you learn, the better investor you become. Tip number 3, diversify your portfolio. Now, what does that mean? Well, diversification is a powerful strategy that involves spreading your investments across different types of assets to reduce risk. Think of it like a buffet. You wouldn't fill your plate with just one type of food, right? You'd pick a little bit of this, a little bit of that to get a balanced diet. Similarly, in investing, diversification allows you to balance your portfolio. By investing in a mix of assets, you're not putting all your eggs in one basket. If one investment performs poorly, others may perform well, reducing the potential losses. This strategy is crucial to managing investment risk. It's about creating a portfolio that can withstand the ups and downs of the market. Remember, no investment is risk-free, but by diversifying, you can spread and manage those risks, rather than being exposed to the potential downfall of a single asset. Diversification is your hedge against risk. Tip number 4, patience is key. In the turbulent world of stock market investing, patience is not just a virtue, it's a strategy. It's easy to be tempted by short-term gains or to panic in the face of dips. But remember, the stock market is not a sprint, it's a marathon. It's about longevity, not instant gratification. Investing in the stock market requires a steady hand and a calm mind. It's about having the patience to wait for your investments to mature over time. This is where the concept of long-term investing comes into play. When you invest for the long term, you allow your investments to grow, to weather the highs and lows, and to potentially reap the benefits of compound interest. So don't be hasty. Resist the urge to constantly buy and sell. Let your investments do the work. Let time be your ally. In the stock market, patience often pays off. Tip number 5, review and adjust. Investing is not a one-and-done deal. It's a continuous process that requires regular attention and fine-tuning. Think of it like a garden. You can't just plant the seeds and walk away. You need to water it, pull out the weeds, and sometimes even replant. Your financial goals may evolve over time. Perhaps you're planning to buy a house, or maybe you're saving for your child's education. Market conditions can also change, sometimes quite abruptly. For instance, a sudden downturn or an unexpected boom. Personal circumstances like job changes or health issues can also impact your investment strategy. The key is to embrace the fluidity of investing, regularly review your investment portfolio, scrutinize your financial goals, and assess the market conditions. If things have changed, don't hesitate to adjust your strategy. It's all part of the journey. Stay flexible and be ready to adjust your strategy when needed. To wrap things up, investing in the stock market can be a rewarding endeavor if done right. We've journeyed through 5 crucial tips that can make your investment journey a successful one. Let's take a quick recap. First, start with a plan. Your investment journey should always begin with a well-thought-out strategy. Next, remember the importance of continuous learning. The finance world is dynamic, and staying informed is vital for success. Thirdly, diversify your portfolio. Putting all your eggs in one basket is a risky game. Spreading your investments across various assets can help mitigate risks. Patience, our 4th tip, is key. Rome wasn't built in a day, and your investment portfolio won't be either. Stay patient and let your investments grow over time. Lastly, review and adjust. Be flexible with your investment strategy and adapt as necessary. Master these tips, and you'll be well on your way to making your money work for you in the stock market.